What's up, YouTube? It's Joe Catchpolia sitting on the couch, making some money investing in fractional real estate online. As usual, today I'm going to talk about, are we averaging down when we're buying tokens on the way down, or are we doubling down on a bad investment? You might wonder, what does that have to do with KFC? Well, I'm a fat guy. I identify as being rotund or portly, or just big boned, whatever you want to call it. But I was just searching online for some imagery related to doubling down, and this KFC double down popped up. And I don't know if you guys have ever had this, but I don't understand why this isn't a permanent menu item. So I just wanted to share that, give you a little bit more insight into Joe the person. But this has absolutely nothing to do with what we're talking about today. What I really want to talk about is how investing is at least as much psychological as it is about math. And I don't mean we have to understand the psychology of the other people involved or any of that, which I think helps in real estate, like when you're negotiating and whatnot. Because of that, I have actually taken some psychology classes, but I'm certainly not an expert. But I think where it comes into play a lot is our own behavior. So we're often chasing losses. You have the gambler's fallacy. We have where we get stuck on a certain price we paid. We've got the sunk cost fallacy. There's just all these different ways that we fall into these mental traps that make us essentially double down on deals that we shouldn't have. We're throwing good money after bad or bad money after good. I don't remember which way. I always screw up that expression. But so today I want to kind of dig into, and this is about no property in particular. I have a couple where I've been able to average down that I think my initial tokens were not necessarily great buys, especially the universal lending DAO. I think my original purchases on this one were at a terrible price. My most recent ones are fantastic. Uh, my average is still not great, but it's not, so that's one that is applicable to me. Um, Odom is one that I've averaged down quite a bit. My first tokens were all at $35. My average is somewhere around 29 and change. If you add in, fees, it's a little above that. I think it's closer to 32. I've thought about continuing to average down on this one, but it's more about, what is this token worth today relative to today's price? But I think that is sort of lost on some people, right? That just because I can buy more and it's lower than my initial investment, that doesn't mean I should, right? I should always be looking at the investment relative to what this token is worth today. And I think that, I think when you say that out loud, it makes perfect sense. But when people have started investing in deals and then they get hung up on a certain price that, hey, I paid 35 for that, so I should be really excited to pay 20, or I should be really excited to pay 25, where if we have new information and the value of that property is not the same today, it's not good. And so I want to walk through a couple scenarios, just the math of this to make it really clear. So let's say, okay, the actual property value is $50 and I bought 100 tokens originally at $50. Well, I didn't make any money on that, but I didn't lose any. And it's, that might be an investment that I'm holding for the long term and I'm getting paid something. So this might not be a bad investment, but it's also not great, right? I didn't make anything on this purchase. Well, time goes by, the token price dips. I can buy another 100 share or 100 tokens and I buy them at $40. This is the type of averaging down that I think makes perfect sense, right? I'm buying more, I'm lowering my average cost, but I'm doing it below the actual value of the property. The reason this is helpful is that now I've made $1,000 profit on this purchase. If I made a loss on this purchase, it might, well, I mean, it would be obviously worse because of this first price. Okay, now it looks like I've made an 11% return overall, right? So it makes my initial investment look better. And I think this is what people get hung up on, right? Like, okay, I had a 0% return. Now I've got 11 on average. But really, you just are throwing in this better investment here. So let's look at another one. So, okay, the actual value is $45. Same scenario, right? I bought $50. Uh, the actual value is 45, so I've really lost $500 in value. Well, I can come along and I can buy some at 40, and yes, I'm going to buy those. Even the actual value is 45, but it's really that I've made $500 profit here, and so. But I think a lot of people are making this purchase not because of the $500 profit, but because it wipes out their loss. So now I haven't lost anything on this token, right? And this is the little insidious thought that I think is getting into people's heads a little bit, and then starts to lead to stuff like this. Okay, actual value is $40. I bought 100 at 50. It's dropped down to 40. I buy another 100 at 40. Okay, first of all, and so now I was getting a 20% loss. Now it's only an 11% loss on average, right? So by spending, and this is the one that I think is the hardest for people to realize is a mistake, right? By spending, by buying more, I've lowered my average loss. But this is not a good investment, right? Like I'm not making any money on this. Even though it's lowering my average loss in this token, I'm buying it for what it's worth. Like that's, there's the opportunity to buy at discounts. Why would I want to buy it at what it's worth, right? But I see this sort of this is I think one of the most common where people are sort of chasing prices down and it's really only gets to where it's worth today. It's still not a great investment, but because they spent a lot more in the past, they feel like it is. And you're like, "Well, wait a minute. It's only an 11% loss instead of 20%. That's just because I added more in, right? If you look at your total loss, it's still $1,000 total loss in both scenarios. And then so this can get worse, right? Okay, actual value is $30. Again, I bought 100 tokens uh, at $50. It's a 40% loss, right? And so then I bought another 100 tokens at $40 because I averaged down. Right now, my average is 45. So my average loss was 40%. Now my average loss is only 33%, right? I see people doing this and I don't mean to laugh. I know it's, anytime you're stuck in a token and its value's going down and you realize, oh, this was not a great investment to begin with, it can get worse. But this is not helping you, right? Even though, okay, we went from a 40% loss to a 33% loss, and I think this kind of gets what people get focused on, right? Like they're like, okay, I'm averaging down my basis, I'm doing better on a percent basis. But no, by making this second purchase, I went from losing $2,000 to now I'm losing $3,000. This isn't helpful. This is a negative thing. Um, I think part of what's going on here is people say, "Oh, well, I never would have spent $50 on something if it's really only worth 30. So it must actually be worth more than that." And now that I can get it at 40, I absolutely have to buy, right? I think this is where we're seeing the psychology come into play where people are doing these, they might not even think that that's what's happening, but when you're, uh, and this is, these are just random numbers, could be any property, right? But you bought a hundred at $50 and something. The actual value might be much closer to zero today, right? And we see some DAOs that's the situation. Would you buy those at $17, right? My thought is, if your actual value is actually zero or could be zero, you're just losing another $1,700 by buying a hundred tokens at that price, right? Um, Sure, either way, you've got a 100% loss, but we went from going to a $5,000 loss to a $6,700 loss. So this second purchase is not doing you any good, right? And even if instead these tokens are worth $5 each, right? Like maybe it's not really zero, maybe it's five. Well, okay, we're still worse off, right? This is that scenario we just talked about. We're bringing our average loss down from a 90% loss to an 85% loss in that scenario, but you're still bringing your total loss, you're increasing it by $1,200, right? Instead of just losing 4,500, we're losing 5,700. Uh, that's, that's a decision that seems to be being made over and over again on this platform. And I am picking on Brownfield a little bit. I think you guys know that. Is it worth zero? I don't know. Is there a possibility it's worth zero? Yes, right? There's some chance that token is $0, which reminds me, please like and subscribe, especially if you've already, if you're invested in Brownfield. I'm sure you like this video, so please like and subscribe. Uh, In the description to this video, I have links to all the places where I currently invest in fractional real estate online. If you click on any of those, and some of them give you free money, some of them don't, and some of them say they will, and they don't actually right now. But if you click on any of those and go through to the sites, do your own due diligence on those platforms. Don't just invest in them because I do. And the same thing with any of the properties that I talk about, right? Don't just invest in those properties because I say it's a good deal, or I say it's not, or I say I'm interested in it, or I say I'm not. I'm trying to share, the math of some of this stuff, the way I like to think about it, the due diligence that I like to do. Um, but I'm not trying to tell you what you should or shouldn't do, right? And so, yes, is there a possibility that the brownfield tokens are worth zero right now? I think it's a very real possibility. Might they be worth $5 or $10? Possibly, right? Um, so regardless of how cheap or how much you spent on your initial tokens in that, buying additional tokens to average down doesn't actually help you, right? It's not helping your initial purchase whatsoever. And so, but what could be happening here is people are saying, no, I just don't believe that they're really worth 17, right? They've got to be worth at least 25. That people bought them at 50. How could they only be worth 25? And this is sort of that psychology trap that I mentioned, that where it's not based on math, right? And it's not. There's a lot of people who are saying, well, okay, if we pay down the mortgage and we do these things, maybe we can make it worth more, right? Um, and I agree. Like, I think the property could possibly be saved. I don't, I'm not trying to say that there's no chance you're going to save it, or there's not some financing tricks that get it to survive. But I think that most of the value in that scenario is being created by the new capital that's coming in, right? Because there's new capital paying off debt, and by a lot of the work that's being done, right? And so in the scenario where either some of that new capital coming in is great, is potentially getting a terrible deal, right? Because they're jumping into a situation where, the rest of the tokens, um, where it's diluting the loss basically of the money that's already in there. Or, if there's a tremendous amount of work that's done, and there's not really any is it remuneration or remuneration? I always screw that up too. There's a couple of things I screw up all the time, right? I should look that up sometime. But anyway, it's just that there's a lot of work being done that's not getting paid for, that's really accruing that value. So I think, I don't want to say I don't think that there's some chance that at 17 it's really worth 20 or 25, and this is a profitable investment. But I think that when you look at the platform and you think about where else you could put that money to work, it's really hard to imagine that this makes the most sense, unless it's making you feel better about the initial purchases, right? Because it's averaging down your basis, so your total basis just looks better. Like, I think, and there's a whole bunch of people that are talking about this. Some on our Discord, some on the Discord there, and I actually have quite a few people in Brownfield that are DMing me as well. I think but it's only one of them, right? I mean, the same thing is happening in Odom. Uh, I really want to buy more of this because I think it's just actually cheap today. And so it's not the same thing, right? It's a similar, it feels the same, because I bought a bunch of this at 35. Not a bunch. I bought most of it below that, but I started buying at 35. Um, I think really if we sold it today, we had to cash, even the low end of the cash offers, I think we're still getting like $33. So I lost money on those initial purchases based on that, but based on what I really think the property is worth and what I think we'll end up selling it for if we sell it, or, I think putting an actual value on the net present value of that property at around $35 is probably real. So, with fees, I do think maybe my first purchases in there are a loss. Um, and so it's only gotten better because all of the cheap tokens that I bought, right? I bought a whole bunch at 25. Um, Wanting to buy more at this price has, one of the things that I struggle with this, right? I'm not immune to any of the psychological effects of investing. Is I don't want to do it because It's going to bring my average down, right? I want to make sure the reason that I put more into this is because I really think it's a compelling purchase at 2365, which it is. I think I've mentioned this in my video the other day. I've struggled about should I, I really kind of wanted to take my money off Lofty and put it on other platforms. At the same time, when you start to just get these crazy deep values, and almost all the ones that I'm invested in, I feel like, a lot of them I want to double down because of where the token prices are today. And they just are very much divorced from what actual values of those properties are. I mean, there's just so many that once we get to a real world sale, it's going to be amazing, right? I mean, like this Odom, I think if you bought every token at $24, even if we really fire sell it, you're going to make some money on it. So I don't know. I think that um, I've really gone back and forth on putting more money on the platform to take advantage of this, and just not because I just don't feel good about having a lot of money on the platform because I don't have a lot of confidence in the platform. Um, but like so I just want to make sure it's clear. The two situations look very similar, right? But here, I think that there's one of the things I want to point out is why are they so different, right? And the big reason is the debt. Whenever you have debt and leverage on a property, it's much easier for your ownership position to go to zero than when there's no debt on it. Like Odom, I mean, Odom might owe some people a little bit of money. I actually think that, yeah, we do have um, probably a negative operating reserve. Yeah, we owe a little bit of money, right? But there's not some large mortgage. The chance of this going to zero is basically nothing, right? I mean, you're not going to sell this property for $1,000 and actually lose money relative to the debts that we owe. Um, so it's not really possible there. Where Brownfield, the mortgage is 2.5 million bucks. You could say, okay, no, the property's value is 2 million, and you're 500,000 in the hole. Or you could even say it's like 2.6, and after closing costs and everything, you're still walking away with nothing, right? And I think that currently there's an offer at 2.5 million, and that's exactly the debt, right? And the lender just wants you to take that over, right? They just want the new person to assume the debt, and go from there. Um, Obviously that's a terrible deal for anybody that owns tokens in the DAO, right? I mean, they're in a spot where uh, that would wipe out their equity. Um, but honestly, if the lender's willing to do that, oh, this is a thought that I haven't had before now. But if the lender's willing to do that, it would make sense for anyone that has an ownership position in the DAO to just go and be go and make that same offer, right? Oh, hey, sell it to me. I'll take it over at just I'll sign on the debt and I'll take it over, and now I have 100% of whatever equity happens to be there, if I believe that there's actually value over and above the debt. Um, Okay, that's a weird thought, and I hadn't really, it hadn't even occurred to me until now. Kind of have to share that and see what people think about that. But in any case, that's what makes these two situations so different, right? Is this one can go to zero because the equity position, because leverage just creates a situation where real estate can go to zero. Now, of course, Odom could go to zero if something happened, if there was environmental contamination, if there was, if the property was condemned and it was going to cost more to tear it down than the land is worth. We've seen that scenario play out in another Lofty property. So yes, even without leverage, there's the potential to go to zero. But especially because of the land value of this property and the market that it's in, it's not going to go to zero. Like, I mean, I would bet a significant amount on that. Uh, and I am right, and I'm making that bet with my tokens. Um, the lending DAO, I think, is another situation altogether because again, it's harder to go to zero because it doesn't have its own debt, but it is debt, right, lent to other entities. Is it possible? And there's no liens, right? The lending DAO does not have a lien on any of those properties. So it's possible that it never gets paid back some of that debt, right? Um, if some of those other DAOs accumulate a whole bunch of other debt, if they're, and it ends up being secured somehow, there's a judgment lien put against it, something like that, could make it so that our debt position is wiped out. But it would have to happen with every single loan. So again, I mean, I think the real difference in these scenarios is these two don't they're not using leverage in the same way. So it's very unlikely that the token price is going to move so far. Um, and again, and why I'm happy to double down is because I think it's very clear what the real value is here relative, or it's at least it's more clear what the real value is relative to the token price. On this one, it's extremely difficult to know, right? I mean, and so, even though $17 looks like a real bargain compared to 50, um, it doesn't look great compared to zero, right? And it might be three times the actual value if the real value is $5, right? And so I guess the point is, if it is because this isn't a clearly profitable buy, it's not helping your overall position, right? And so that's my only point today. I just, I don't want. I think that people are clinging to the concept of averaging down their basis in a way that is hurting their actual returns, right? Because they're helping their percent return on that particular token, possibly, but overall, because you know maybe you're making no money on it, maybe you're losing some money on it. Um, yeah, like this scenario, right? Like I'm not making any money on it, but I've doubled down, so now I've improved my percent loss. Um, it's still not helping you because you've made no money on that, right? You'd be in this scenario, and like I said, I think this is one of the worst traps that people fall into. But in this scenario, you'd just be much better off spending this $40 on another token somewhere else, right? Like where you're making, or on another platform even, where you're making a profit on that versus I'm making no profit, but because I'm adding to my base, then it ends up lowering my percent return. Anyway, um, hopefully that's clear, right? I just think I just I know that a lot of there's a lot of, like I said earlier, the psychological impacts on investing are far stronger. That it's where people trip up far more often than the math, right? And I think sometimes it causes you to do funny math, right? Focus on the wrong things. Like what's my percent loss? What's my average basis? How is this moving because it's really tempting to move my average basis down by such a huge amount, right? Oh, my average basis went from 50 to 33. That's a big win. But if that purchase was actually a loss, and again, I'm not saying that it is. Maybe it's not. Maybe, maybe there's some value over and above that. It's just not clear to me. Um, it's really hard to understand why you would do that, except for, there are the other issue that comes up now is that people are doing these sorts of things to get more control of the entities as well, right? Okay, I want to make sure the vote goes my way, and so now I'm buying discounted tokens and I'm getting more control from that. Um, and so it allows me to protect my initial investment more. But one of the things that I think people are doing when they're looking at that is they're overvaluing their initial investment, right? Because their initial investment was, okay, I bought 100 tokens at $50. My initial investment thought $5,000. But if my values now really that initial investment's only 500 bucks, I shouldn't spend another 500 bucks just to have exert more control and protect that initial investment, right? And so that's, I think, the other thing that is because of that sunk cost fallacy, that focusing on oh, I've got $20,000 into this deal, which is a specific person I talked to about has that on this one. I've got $20,000 into it. It makes sense for me to spend X more dollars to have control to protect that 20,000. Well, no, that 20,000's gone because you spent 50 bucks a token. You've got 10,000 invested in this now, right? That money is just gone. Like whatever your current value is, that's what it is. Um, and it's important to just recognize that and to move forward from the position that we're in and to make decisions on future investments based on what we know today, not based on anything that we did in the past relative to that token or that particular property. And so a lot of times you see people really get caught up in just focused on specific properties when there's other properties where you could put that same cash to work and make significantly more money, right? And it's but because they're focused on, oh, let's make this one not look so bad. I know there's a lot of people in the lending DAO that want to make the lending DAO work. Where the time and money spent on that either we're going to get paid back or we're not. Either Lofty's going to fix their mistake on it, or I mean, like, I think there's some impact we can have. There's some impact relative to the DAOs that owe the lending DAO and whatnot. But overall, I will still keep buying it whenever there's $20 shares to buy, or tokens to buy, because that's the price that I've evaluated and decided I think is the right price to pay for it, right? And I guess that's really the whole point. I think because it's such a trap, and I'm gonna try. I think I'm gonna try to stop talking about it so much as far as talking about averaging down. Um, I think I'm gonna stop talking about my average basis as much whenever, especially whenever buying more, because really the only thing that's important on in each future purchase is what is the deal I'm getting on that future purchase, right? There's never a reason that I want to make a bad buy today because I made a worse buy in the past. And I guess that's the whole story. Um, was this was taking 20 minutes to discuss this a waste of everybody's time? Like, whenever I say this stuff out loud, it sounds so obvious, and I think that it is. But when we're actually acting on this stuff in real life, in the moment, I feel like a whole bunch of us, and most, even a lot of smart people, get caught up into these traps. Um, and it's something I've just seen over and over again in lots of different, I mean, you see people like buy, I've seen this in real estate in general, where they buy a property, they got a terrible deal on the property, so they're trying to sell it for even more, so they put even more into their renovation. They keep dumping more money into the property, and they're never going to get it. It's never going to get out what they put into it. Um, that's the same exact sort of story, right? Like, where you just get, instead of just taking that loss, right? And I've got a deal right now where I've got a note that I made a couple years ago. I still have a few years on it. Uh, I'm trying to get a discounted payoff on it right now, or to sell the note at a discount to what I originally lent on it, because it's just not at a great rate. It's not an ideal rate of return. I'd much rather have that money back today, reinvest it somewhere else, and it'll do much better for me. But it is at such a discount at the moment that it would actually mean that I lost money on that deal. I'm still going to be perfectly happy. You know, at the time, it didn't seem like that, right? Because part of the reason it's such a big discount on the note today is because of how much interest rates have changed, right? At the time, it didn't seem like it was going. I'd have to take such a haircut to sell it. It's tempting to just hold it for 2 more years at the very low rate that it is, um, and then get paid off in full and be like, look, no, I made money on that deal. That's great, but I'm pursuing a payoff or a sale of that note because I know with that cash in hand and with the returns that I'm able to make today, that I'll do much better just taking that loss, right? It's a loss. Yeah, took that loss, but putting that capital to work at a much higher rate of return today is just so much better than holding on to that loss, or even doubling down. That I don't have the ability to double down, but even just holding on to it, eking out this tiny return. And that's, I think, what a lot of people on Odom kind of want to do. They want to just hold it, get a really suboptimal return, so that someday in the future maybe we'll sell it for a better price, right? Where for me, like, I would, I think we've just really gotten to a point where we've exhausted most of the options. Yes, we could hold it, get an anemic return. The big problem is the rent relative to the size of the property, relative to the taxes that we pay there. Um, there's just no way that we've come up with to get an actual good return there. And so, but the sale today is a loss for a lot of people. Or it's not a great, and even if we sold it today, it wouldn't be a great gain for me, but it would be I would sell it at a loss to unlock that capital at this point to put to work somewhere else too. I mean, I'm not excited about it, but it is uh, I think the velocity of our capital, right? The more we can move it, put it into things where we're getting a big return quickly, and then do that again. It's so easy to do that it doesn't make any sense to leave stuff, locked up in something, getting this very tiny, 3% return, 4% return for a long period of time. Um, I would just prefer to move on. Okay, now we got way out into left field. That this is, separate from the conversation we were trying to have. But anyway, are you somebody who's fallen into this trap? Have you been doubling down on stuff uh, that you shouldn't have been, right? Just because it makes your average look better? Do you love the KFC double down? Have you ever tried that? Any of those things, feel free to put them in the comments. Feel free to jump in the Discord. Let's talk about that. Um, Man, I got to go eat something now. I don't know. I shouldn't have left that video up this whole time. And if you do own Brownfield, I really don't mean this as an attack on something that you've done. I feel for you guys. I know this is like a big loss for a lot of people, and hopefully, hopefully you can mitigate the losses to the best that you can. But I really just worry when I see people throwing more money into it. That is not. I mean, maybe there's some analysis going on, and you feel like, no, actually, at $17, I do think I have some equity. Um, I'd want to be really clear in that math, right? Because there's other spots on the platform where you can have a very certain equity from the dollars that you buy day one. And so, all right, that's it for real for today. Till next time, gonna keep making mistakes so that you don't have to.